As a special treat this weekend, I thought I'd do a video version of the editorial. The first stock here is Bumi, which was the chart of the week yesterday, Friday the 8th of March. The big attraction here was the way that this bounce to start this month actually came in above the 200-day moving average at £3. Very strong sign and a very strong day yesterday. The open of the day was the low, £3.19, and we closed just off the high of the day at 350.9, so close to being a Marubozu candle. Otherwise, we're looking for really a break of the 20-day average to take the stock right back up again and towards the 480, 490 level, which is the top of a September rising trend channel. So a really strong setup there. At this stage, probably only back below the 10-day moving average at £3.35. The green line would even sort of begin to get you having second thoughts on the buy argument there. And 335 is a decent stop loss, or just below that would be a decent stop loss on the trade. Sticking with the mining area, and we have Centamin. And here what you can see is, apart from the massive gap to the upside, which really started the situation here in January, until that time really I thought there was a chance, however remote, that the shares would go back down again. But basically after that gap in January to the upside, which is still unfilled, almost no chance of any pullback of a significant nature, and that gap of 45 pence is really the pivot for the whole price action at the moment. A little bear trap to start March, and consolidation just below the initial January support around 52 pence. But it looks like that consolidation is over now, and as little as an end of day close back above the 50-day moving average, the blue line at 54, maybe give it up to 55 pence, would get sentiment up for a new leg higher. At this stage, probably we're looking at a trajectory like this, quite steep, and well, we could even see, as you can see, 80 pence plus over the next few weeks. Maybe, obviously, because it is a big target here, wait for the moving average to break, but it really does look like a new leg up here. Doesn't tally at all with my view of the fundamentals and obviously the geopolitical situation in Egypt, the main place of business for this gold miner. But still, you can't argue with the chart on this case. Finally, one stock which was a great highlight of the past week, and obviously a very important blue chip situation. Vodafone, as I've said many times before, a gap through the 200-day moving average is one of the biggest trend-changing signals you can have, and this was achieved last week on the Verizon news of that situation with Vodafone. The tie-up they have could be sorted out in a positive way. So basically, step one, the shares have already held the gap. The floor of the gap is currently at 176, something like that, just around that level. And really, while we're above that gap support, you'd be looking for a substantial move to the upside. Maybe £2.40, and this summer 2012 resistance line is a bit over the top. But really, another 10-20 pence in a very short space of time looks to be an appropriate target there.